The economy is in free fall, and no one's sure where rock bottom is. And as the mortgage crisis and mounting job losses melt away the American dream, another fundamental economic problem is being exposed: America's debt epidemic.
Middle-class America is under attack.
We begin then.
Elizabeth Warren is a Harvard law professor in charge of the oversight panel monitoring the government's $700 billion banking bailout. She's also a leading expert on consumer debt.
Is this the next crisis?
It's not only the next crisis, it's the now crisis. None of these things are separated from each other. We are in debt crisis, not just mortgage crisis.
Want to refinance and get cash?
Before the housing bubble burst, many Americans were able to take loans against the value of their houses to stay afloat, using that cash to pay off credit cards and other debts. But with home values plummeting and unemployment rising, millions now have nowhere to turn.
I never knew this would happen.
And American consumers are now carrying an unprecedented, staggering amount of debt: $2.5 trillion.
Should we feel sorry for people who are buried in credit card debt?
To me, it's not about feeling sorry. It's about understanding the economic realities. The median American family has tried to hold on to an American dream that their parents could easily afford on one income, and today's family can't pay for on two. They need to make it to the end of this month, and if plastic is the way to do that, that's what families have been doing.
Harvard's Elizabeth Warren says many Americans have gotten used to living on the float, and in the process, the credit card companies have thrived.
There's profit to be made in debt. Not profit for the family, but profit for the people who hawk it.
And Warren says this was no accident. Nearly 3 decades ago, in a move to boost profits, credit card companies lobbied the government to get rid of caps on interest rates.
We told the credit card companies anything goes.
Then they made billions by lending to just about anyone, profiting from charges described in the fine print of those credit card contracts that even Warren, a Harvard law professor, can barely understand.
Credit card contracts have grown from about a page and a half in 1980 to more than 30 pages in the early 2000s. And let me just be clear, that additional 28 and a half pages did not help the customer. It's tricks and traps and trailing interest and pay-to-pays and a whole bunch of things that literally didn't exist 25 years ago. They're not looking for customers who can pay off credit cards. They're looking for customers who will hit the sweet spot, fall into the tricks and traps, and incur a $45 fee, a 19% interest rate, a 29% interest rate. After that is just profit, 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 profit.
What you describe sounds like loan sharking, which is illegal. Why isn't this illegal?
That's the best part. The credit card companies have put the loan sharks out of business. The kinds of interest rates that some credit card companies are charging would make Tony Soprano blush.
Riskier borrowers pay more for credit, just as riskier drivers pay more for car insurance.
Nessa Fettis is an attorney with the American Bankers Association, the industry trade group. GE Money, a unit of NBC's parent company that's in the credit card business, is a member.
Why has the industry fought so hard against any kind of regulation when it comes to interest rates?
Well, history has shown that if you cap interest rates, people pay more for credit and fewer people have access to credit. We have supported regulation that makes consumers understand what they're getting.
The ABA says a new law that takes effect in 2010 will make credit card contracts much easier to understand, but banks will still be able to charge whatever interest and fees they see fit.
It's an unsecured loan, which means there's no collateral, there's no house, no car, which is used to encourage people to make payments. It's the riskiest type of loan.
While credit card lending has returned steady profits for decades, the industry is bracing for unprecedented losses this year. Defaults are on the rise.
So how soon before you're not able to pay it at all? And
my husband doesn't go back to work in the next couple of months. This will be the first thing we stop paying, is the credit cards.
And if they do stop paying, Well, the massive credit business has spawned another multi-billion-dollar shadow industry ready to take over, debt collection. And some say the recent tough times are leading to vicious collection tactics.
No, you answer my question.
Some harass.
You slithered over the border like snakes. You're nothing but a financial terrorist.
Others threaten.
Do you want to go to the big house?
This is an industry that makes its money by being out of control. Pay it or your life becomes a living hell.
Like most collection agencies, Academy works on commission, so there's an incentive to be persistent. But there's also a federal law to protect consumers from overly aggressive collectors. For example, a debt collector can't call late at night, lie, swear, or tell anyone about the money you owe. The idea is to protect consumers from harassment. Roseanne Anderson, who represents industry trade group ACA International, says contrary to its predatory reputation, the debt collection business plays an important role in the nation's economy.
The collection industry returned $40.4 billion to U.S. businesses in 2007.
But there's another part of the industry that collects billions, even though it sometimes flies under the radar. When a traditional collection agency can't recoup money for a retailer or credit card company, those businesses often sell the delinquent accounts to debt buyers, usually for pennies on the dollar. These debt buyers are then free to collect and keep whatever they can. Harvard's Elizabeth Warren says there's big money to be made in this second level of debt collection. And there's also less oversight and the greatest potential for abuse.
So the second level tends to be the pay it or your life becomes a living hell.
We see these commercials for credit cards where the happy American freewheeling spender is ready to toss down his plastic and get whatever luxury item he needs. Has there been a shift in the American psyche to where it's acceptable to be carrying large amounts of credit card debt?
Look, there's money to be made in debt. Credit card issuers, banks have made literally trillions of dollars in profits off those credit cards. And that means it's been worthwhile for them to spend billions of dollars over the last 25 years in telling the American people, debt is good. Debt is valuable. Debt is what responsible people take on. Debt is what loving people take on. Debt is what successful people take on. Of course, it's changed our attitudes. That's what $1 billion will buy you.
You tell a story about a banking executive who said something to you when you were giving a presentation. Describe that to me.
So I was asked by an eager young official at the bank to come present some of my data about bankruptcies. The banks were very concerned, this is back in the 80s, about how much they were losing when customers filed for bankruptcy and wrote off their credit card debt. And basically I said, look, if you would just use a credit screen and get rid of this relatively modest percentage of high-risk borrowers, you could cut your bankruptcy losses very easily. And everyone's all excited about it. And then the person in the back of the room raised his hand, and everyone got quiet, and I suddenly realized, there's the guy with all the power. And he said, all very well, Professor Warren, but those customers are where we're making all our profits.
And what did that say to you?
It's all over. Everyone got up and left. In other words, no one wanted to cut out the people who can't pay.
But if people can't pay their bills, how do the credit card companies make the money?
Well,
if I can't write the check to MasterCard, how are they making money?
Well, because you write a few checks to MasterCard before you quit. Can't pay doesn't mean never pay a nickel, but pay enough to pay back the basic principal and pay a big chunk of interest on top of that. The reality is, you were probably profitable to them. They made enough money early on in your payments that you were a profitable customer.
Harvard's Elizabeth Warren says cleaning up the credit industry will require fundamental reform, from the lower rungs of debt collectors right up to the banks and credit card companies that help fuel the debt epidemic in the first place.
Middle-class America is under attack, and it's under attack in part from a multi-billion-dollar industry that has figured out that you can just keep carving profits out of them, carving profits out of them. So long as the guys at the top can get a free walk, then you better believe the practices are going to stay just as dirty as they are right now.
So you're in debt. You can't pay your credit card bills anymore. The company sends collection notices for 3 months. They throw up their hands. What happens next?
That's when the phone calls begin.
And who's making the calls?
The first round is by the credit card company itself, usually. Most large credit card companies have someone in-house. It's called to work the accounts. And so they call. Some use the strategy of being the nice guy. I know you are having a difficult time, but pay us $50.
And they're the nice guys. They're the good guys.
They're the good guys, right? And when that doesn't work, the credit card companies say, fine. They have exactly so many days they'll spend time on that. They bundle up all the ones that haven't been paid, and they sell them. They sell them the same way you and I would sell our old furniture, right? We said, we're tired of that stuff. You bundle it up, and you sell it in the market.
And who do they sell it to?
They sell it to people who make a lot of money from buying it and working it a second time.
And this is a booming industry.
This is a huge industry. This is a huge industry.
And what's their rap, the second level?
So the second level tends to be the pay it or your life becomes a living hell.
A living hell.
A living hell.
In what way?
Well, let me see how many ways I can do. Sometimes your life will become a living hell because I will call you, and 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 I will call you. I will call you and I will call you vile names. I will call you and I will harangue you. I will call you and I will make fun of you. I'll look on your application and I'll call your mom. I'll call your dad. I'll call your neighbor. We study the families who filed for bankruptcy. And one of the main reasons they identified for what they hope to accomplish by filing for bankruptcy is to stop the calls. Stop frightening me. Stop frightening my children. Stop threatening us.
Is this an industry that's out of control?
This is an industry that makes its money by being out of control. This is an industry that is profiting out of terrifying people.
It used to be that folks lived within their means.
It used to be that folks could live a kind of average middle-class life within the incomes they earned. Today, quite frankly, it takes an upper income in order to support a middle-class life. The big expenses, housing, health care, child care, transportation, have gone up so dramatically at a time when income has stayed flat that the only way the family can pull it together is to go into debt.
What are some of the other reasons people find themselves in debt?
The big one is medical debt.
Medical debt.
Part of how we pay for health care in America today is by laying down plastic. For the 47 million uninsured Americans, plastic is all they got. And let's be clear, even families with health insurance are using credit cards. They're using them for co-pays. They're using them for parts that aren't covered under their health care plans. We ask individual families, when somebody gets sick, to find a way to pay for it. And a credit card that may start out at 7.5% is the answer. The problem is what happens next. The person can't work, falls a little behind, and all of a sudden we're financing medical debt 2, 3, 4 years down the line at 29% interest, $45 a month on fees. The family is now caught. And frankly, they will never get out of it.
Can we ever go back to living within our means?
I think it's the wrong way to ask the question. The question is not about living within our means in the sense of too many expensive toys. The real question is if we've got flat wages, rising core expenses, not enough health insurance, not enough job security, something's got to give. We've got a blanket to try to cover our families that's just too short. You can pull it up here and your feet stick out, or you can cover your feet but you can't get covered up above.
That's a tall order for change.
But this isn't about simple solutions. This really is about strengthening middle-class America out of them. No single magic bullet will fix everything, no one thing, but we can make it a whole lot better by getting some decent, fair rules on credit.